Hello, everyone. I'm John Perkins with the Brownfield Weekly Livestock Market Update, sitting in for Megan Grebner. We are joined by University of Missouri livestock economist Scott Brown. Scott, how you doing on this Friday?
I'm doing great, John. Thanks.
All right, Scott, let's go ahead and kick things off with the way things went this week in the cash livestock markets. Starting off with the feeder cattle trade, this is the second week in a row where we've had sharply lower prices in the major feeding areas. What happened?
Yeah, so we're certainly talking about steady to $5 lower feeder cattle prices as we look around the country. We continue to see, some, I think, cash fed cattle contributing to that. We'll see with the lower corn prices that we've seen, especially on the future side this week, whether that helps provide some lift to those feeder cattle cash prices as we look to next week.
Okay, and then how about the cash hogs?
Cash hogs, we're virtually unchanged this week in terms of cash hog prices from where we started and into the week. However, on the lean hog futures side, those June lean hog futures contracts are actually down a little more than $3 this week.
Scott, we also had some monthly trade data out this week. What's your assessment of the numbers?
Yeah, and John, when we look at what we got for the March monthly trade data, we do see now 2 months in a row of beef, pork, and chicken total exports being below year-ago levels. That follows what was 13 consecutive months of exports above year earlier levels, and 29 in the last 31. So we've seen a real slowdown as we've got into the February and March data. We look at beef exports; they were down 3% relative to a year ago, but only down 0.9% when you look at the value of those exports. First quarter pork exports down 6%. I continue to see with higher tariffs, I think what's been a slowdown on the pork side of the equation. However, I know we've been seeing a little bit of weekly trade data that would suggest maybe some recovery as we look in April, as we're beginning to see some signs that the Chinese are getting back in and buying some U.S. pork. So we might see a turnaround in the pork side once we get that April number. But this is certainly a different scenario the last couple of months than the meat complex has seen for several months running.
And Scott, we had another round of trade negotiations between the United States and China this week. And while there's been a lot of uncertainty lately, Treasury Secretary Steven Mnuchin was quoted today as saying this latest round of talks were constructive.
Yeah, so I think if we can get an agreement at some point down the road, to me it certainly is a positive, at least on the pork side of the equation, if not, frankly, for some beef as well. Getting to the finish line is always the struggle. But when you see the kind of ASF issues that continue to crop up in China, I'm not surprised for a successful trade agreement to announce maybe a fairly substantial amount of pork flowing to China. We certainly continue to see those rumors out there that we could get a significant boost in pork exports. And I look at the market side, and it seems like markets are certainly suggesting that to be the case as well.
It seems like that's what the USDA is suggesting in this latest round of supply and demand estimates as well. That was a big month-to-month boost in the average expected barrow and gilt price.
Absolutely. So we got WASDE today, and that $8.50 higher barrow and gilt price certainly catches your attention when we're already, into May already. So that's a fairly significant change. Again, I think we're all chasing what's happening in China. So it's I'm not trying to be too difficult for USDA. It's been a tough market to forecast. However, to get that $8.50 increase, it will take strong pork prices for the remainder of the year to make that happen. But that is certainly the noteworthy change out of the WASDE. Now, I will say at the same time, USDA chose to lower the chicken price $3 as well out of this month, suggesting maybe things not so good for the chicken complex.
And there's been, some relatively high chicken production too, as well, probably contributing to that decline.
Absolutely. So I like to remind us that we don't want to forget we're in growing meat supplies. USDA and this WASDE reminded us of that again, although they didn't make many changes to the 2019 estimates. We got our first look at what USDA suggests for 2020, and another 1.8 billion pounds more beef, pork, and chicken on the market. That's several years in a row now where we're talking about increases, and that's going to continue to weigh on markets. We can talk about some of the positives happening on the trade side, but we're at fairly large meat supplies.
All right, and Scott, speaking of eye-catching numbers, just how tight are hay supplies?
Boy, we're in a situation we haven't been in for a while. You look at those May 1 hay stocks reported by USDA, 14.9 million tons of stock. It's the second lowest level over the last 7 decades. Only 2013, where we were coming out of that serious 2012 drought, were we at lower levels ever. I don't want to make too much of that because I see a lot of green pasture in some parts, albeit that growth has been a little slow this spring with maybe what's been colder weather. But plenty of moisture, so hopefully we'll get some growth back. We need that growth back if we're going to talk about growing hay stocks as we go through the year. And I certainly think when we talk about things like beef cow counts, these hay stocks are going to matter a lot in terms of producers' appetite to be holding more cows as we go forward.
But at least it looks like the your corn and soybean meal stocks are going to be relatively equal, at least at this point.
Yeah. So you look at, I always go, you look at where USDA was at on WASDE for the 2020 crop, so the crop that we'll harvest this fall, and they're talking about corn prices that are 20 cents lower than where we averaged this year, and soybean meal are $15 a ton lower than where we were last year. To me, all those things say, yes, we'll probably have lower livestock prices, but feed costs will be down as well.
All right, Scott, what's on tap for next week?
Yeah, so next week we're going to talk about a consumer confidence report in next week, and then some discussion on retail prices for meat as well.
All right, thank you very much, Scott. For Scott and for Megan Grebner, I'm John Perkins with Brownfield's weekly livestock market update.